In today's video, Raoul discusses the potential collapse of America and the looming financial crisis that is expected to intensify over the next 2 decades. He also delves into the advantages of Bitcoin and the broader adoption of cryptocurrencies, examining their impact on the future financial system. Without further delay, let's dive into the video.
You get caught in this trap. If you own crypto or technology, you will outperform this entire thing. Now, if you're not wealthy enough to buy, set up a brokerage account doing that because it's complicated for you, you can do it with crypto for no money, and you'll participate not only in the trend of debasement, so you're not getting left behind, because if you're just getting an income and you're not buying any assets, you're truly getting behind. So your 401k may look like the S&P 500. That's not making you any richer. Just buy technology or buy crypto, and those are the only two assets that outperform the central bank balance sheet. So there's your solve at a personal level. With Bitcoin, I treat it as an asset that is going to protect my long-term wealth. And that sounds crazy when it goes up and down like it does, right? And you've just gone through that full first cycle and you're like, oh. But what you'll find is the low is higher than the last time it hit the bottom. And then the next low will be higher and each high is higher. Oh, it's in an uptrend. So I just don't need to sweat about the ups and downs. What I should do is just accumulate every time it's in a down cycle. Why? Well, because the down cycle is signifying that economic contraction is happening and that the world is slowing down and money's being taken out of the system, quantitative tightening, which is the opposite process, and assets fall. And interest rates are going up, so your disposable income's going down because your wages aren't going up enough and the interest rates have gone up more. So it's at that point, the outcome is if economic activity is going to slow down, the next year, in a year's time, they're going to be printing money or cutting rates because it's very cyclical for the phenomena of this rolling of this debt. So therefore, you should be buying more at these points because then you've got the next upside cycle to come, which is what I've always said is it's the cyclical trend within a secular trend.
Okay, this guaranteed people do not know the difference.
So secular trend is something long-term trend driven by a large explainable factor. Bitcoin is an answer to the financial system, and over time, the number of users and people who become aware of its superpower, the more people move across. That is a secular trend of adoption. That's really important. Cyclical trend, the cyclicality is the ebb and flow within it. So that's the boom bust of the economy. Not at a gigantic bust level, it's just a boom bust. Now, Bitcoin halving cycles correspond with all of this. Why? Is there some magic in that reduction of supply? Maybe. But Bitcoin came out exactly at the same time that all interest rates went to zero. They're all part of the same cycle. So every time we get into this economic cycle, it affects Bitcoin in the same way. But over the long run, the adoption, the secular cycle, means it outperforms everything. Because there's no secular adoption of the S&P 500. There's no secular adoption of General Electric. Or that stuff's not really happening. Yes, there's an ongoing purchasing by 401ks, but that's really it. So that big mega trend is the observable trend that people can participate in, and it is going to more than offset what is going on with the debasement of currency. And that's to do with Metcalfe's law and the exponential trend of the adoption of a technological network or a technology itself. Great. So that's why Bitcoin charts over time just keep doing this. It's because it's exponential. The S&P 500 doesn't do that because it's not exponential.
According to a recent analysis by trading firm QCP Capital, Bitcoin and Ethereum are expected to experience volatility due to the lack of effective regulation by United States regulators. In their market update on June 9th, QCP Capital advised market participants to prepare for macro-driven price movements in Bitcoin and Ethereum. While the lawsuits filed by the U.S. Securities and Exchange Commission against exchanges Binance and Coinbase created some turbulence, QCP believes that future upheavals in the macro environment will bring even more unpredictability. However, QCP is of the opinion that the SEC's actions, led by Chair Gary Gensler, will not result in the mass depreciation of prices that some fear. Bitcoin and Ethereum are expected to view the SEC as a toothless adversary, as it becomes increasingly evident that these cryptocurrencies do not fall under the category of securities. Despite the SEC's continued scrutiny and the filing of seemingly far-fetched complaints, it appears that their primary goal is to generate sensational headlines that could potentially lead to a significant settlement. Gensler has demonstrated a more capitalistic approach compared to previous regulators.
What we are doing since 2008 is mutualizing the bankruptcy of the system by the debasement of currency, which is the...
When you say mutualizing, you mean making it everybody's problem?
Yes. You can either raise taxes, which they're trying to do too, but they're also printing currency via the mechanism called quantitative easing, which is actually debasing the currency, which means that every time they do it, asset prices optically rise. They don't actually rise, because if you look at the central bank balance sheet and divide all assets by it, so you're changing the denominator, it's normally US dollars, but when you use the balance sheet, you say, okay, this is the purchasing power of dollars. Now, how many dollars are in the economy or excess printed? And what you find is something like the S&P 500 has gone nowhere. Real estate, gold, gone nowhere. And there's only two assets that have actually outperformed, which were crypto and technology. Okay, which is why we all feel like even though stocks are going up and our 401k is going up, nobody's getting any richer. Okay, we all know this intuitively, that we're not actually getting richer because the stocks I sell doesn't buy me more of a house. So what the fuck? What was the point of buying the stocks if the value of my assets aren't going up? But that is a mutualization, which is bad because it mutualizes it amongst people who don't have assets. So you'll never be able to buy an asset, which is why when you speak to a millennial now, they're like, we can't afford a house. Why? Because they came in to the labor force after the Fed started monetizing or lowering the value of the denominator. So property's got more and more expensive for them. It's impossible for them to buy property, really, unless they're really lucky in the workforce or in entrepreneurship or whatever it is. But generally speaking, it's become impossible. And everything has got more and more expensive, assets have, because of this optical illusion. But wages haven't gone up, remember, right? That's the key thing. Assets are going like this. We were doing this before because of demographics, and it was making people pissed. And now we're doing it from debasement, and there's no way around it. So what debasement does, on the other hand, remember, it makes the price of assets look like it's going up. This is why you can't have a banking crisis of the order of magnitude that existed before 2008. The reason being is you just print money the moment you see it, and voila, everything goes up. So the value of your collateral, so if you think about a debt, it's collateral plus the debt, and the collateral is what guarantees the debt. If you've got a banking crisis, your collateral is often falling so fast that, like commercial real estate, right? We're going to have a problem with that. So there's a bunch of debt, and the banks have got this commercial real estate as collateral, and it's all bloody empty, and everybody's going to try and get out of it. So the answer to that is print money and essentially magic that collateral higher, or put it on the central bank balance sheet. Europe has already done this. So I don't think you can have a systemic collapse because the value of the assets can never go down enough. This is what most people can't get their heads around.
Following the lawsuits against exchanges, the crypto market sentiment has shown resilience, with the crypto fear and greed index remaining at 51, indicating a neutral stance. However, upcoming macro data reports next week could potentially serve as triggers for market movements. On June 13th, the Consumer Price Index for May will be released, alongside the Federal Reserve's policy update, which will determine the future direction of benchmark interest rates. The following week is expected to be action-packed, with significant events such as the June FOMC meeting, including quarterly Fed rate projections, and several crucial central bank meetings. QCP Capital highlighted the analysis, emphasizing potential changes to the Treasury General Account that could drain liquidity from the monetary system, potentially posing a headwind for risk assets across various markets.
Let's just get out of the NFT noise and everything else. I'm having dinner with a friend of mine. He used to run the trading operations of one of the largest banks in Australia. And it's a big bank, the equivalent of Bank of America. And He's like, yeah, he's just retired. And he's like, yeah, I've been heavily involved in crypto at the bank doing stuff. I'm like, what are you guys doing? He goes, we've issued 5 stable coins. I'm like, why? Why do you need the stable coins? Why, why not use Tether or USDC or whatever? He's like, okay, so this is what people don't understand, why crypto is so important for the financial system. He said, we're in Australia. We have a gigantic pension system. Our pension system buys a gigantic amount of US equities. The US is about to go to settlement. So when you buy a share and you have to pay for it from T+2 or T+3, so that's trade date plus 3 days to pay for the bill, to T+1. Okay, that seems fine. Foreign exchange transactions are T+2. They can't settle the US stocks that they buy. So they either have to leave massive amounts of money with a broker that they dealt with who could go bust or uses the money ineffectively, or they create a stable coin for instant settlement. So and they've built that. This one is on top of Ethereum. Okay, fine. But that is a multi-$100 billion use case for why crypto is very powerful for increasing productivity within the financial system alone. And there's many of these all over the place. So why is Tether such a big, useful stable coin? You've basically fractionalized the US dollar and allowed a person in the Philippines who works in a rice field to receive a payment from his cousin who's living in New York City instantaneously without any cost in dollars, which is the currency that they all want. That's mind-blowing. That's why the stablecoin system alone is so gigantic. So I don't agree with there is no productivity or killer app. The killer app of crypto so far has actually been stablecoin.
Are you considering investing in Bitcoin? Share your thoughts on whether now is a favorable time to invest in the cryptocurrency. Additionally, we'd love to hear your predictions for Bitcoin's performance in 2023. Feel free to leave your comments in the section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.